All right, so as promised, let's jump into Unit 6 there. Okay, Unit 6 here. We're taking you guys back to your accounting, okay? And here we're particularly looking at accounting for a manufacturing enterprise, okay? All right, so you wouldn't have done this. You wouldn't have actually done most of this stuff in your accounting 1, but it is the principles that you obviously learned there obviously apply here. Okay, so it's not too much hard work as long as you understand the examples and stuff that they're doing there, and then obviously play around with a few of those exercises, and you should be good. Okay, so obviously here what they're highlighting is that there's a difference between doing accounting for a regular company, all right, which is not necessarily a manufacturing enterprise. Okay. All right, the manner in which we obviously treat things is slightly different. All right. Manufacturers must account for their inventory in such a way that management and cost controls can easily detect where in the system an over absorption of costs has occurred. Remember the last time I spoke to you guys, we spoke on when something is over applied and under applied. Okay. So usually, okay, so basically we need to be very precise about our costing, and we need to be detailed about it so that we know exactly what is costing us what. Okay, so here you see a further breakdown of your inventory when you're looking at a manufacturing company. Okay, that's really the primary difference. Okay, right. So here you can find a terminology chart for a manufacturer. Okay, direct materials is the same as raw materials, and these we look at them as assets. Okay, and then work in progress is also an asset. Finished goods, that's your inventory. All right, that is now ready to be sold. That's also looked at as an asset. Indirect materials, costs of raw materials not directly related to the manufacturing of a particular product. We spoke about this before, that indirect materials is you can't directly relate it to the product. All right, if we look at a wooden chair, we know that wood is a direct material because you can see wood was used here. Does that make sense? But if we start talking about glue, start talking about, you know, certain other things that are not necessarily connected per se, or let me not even use glue, because glue in this case, if it was glued together, it would be. But things that are not directly 100% related to the chair. Also, a lot of the time when we're talking indirect, we're talking about lubricants, cleaning materials. Can you see these cleaning materials would be used for everything, not just the chair. All right, when we're done, obviously, you know, you want to clean off that sawdust or whatever, but we're going to use that to also clean the tables in the office, etc., etc. All right, then direct labor is a cost. All right, and there we're talking about factory workers, bakers, etc., etc. And then indirect labor, supervisors, cleaners. We've seen this before. All right, it's not totally brand new. Okay, it's just the manner in which it has been organized is maybe slightly different, but it's the same stuff. Okay, then here they're talking about factory overheads. All right, these are the costs which are associated with the manufacturing process, but cannot be directly identified in the final product. So electricity, insurance, depreciation, rent, those are examples of that. Okay, and then the indirect labor, the indirect materials would also then be incorporated into your factory overheads. Okay, then fixed costs. Okay, we know what fixed costs are. Variable costs, we know what variable costs are. And then production costs, all costs related to the manufacture of the product. Okay, direct or raw material, direct labor, and then manufacturing overheads. All of those costs that are related to the product are then looked at there in the production costs. Okay. Then here we're just talking a little more to then how we treat these accounts in the actual general ledger, your T account, okay, how we actually treat those, okay? So here, the key thing that we obviously want to take note of, the direct materials T account pretty much is just about the movements of all materials which have not yet entered into the manufacturing process, okay? Direct labor, this account represents payment of wages of all workers directly involved in the manufacturing process, okay? Then manufacturing overheads, all costs utilized in the manufacturing process, except, this is what I mentioned earlier, direct material and direct labor, okay? And will be debited to the manufacturing overheads account. Okay, all those costs that are not those two will be debited to that manufacturing overheads account. Then work in progress or manufacturing account. Here, we're recording all the work that has not yet been complete. It's the work that is taking place. Work in progress, all right? So we're still working on developing our final product. That's what we're talking about there. They say the three elements of production, direct material, direct labor, manufacturing overheads, which were used in the manufacturing process during a financial year will be summarized in this account. All right? The balance of the account will represent the cost of items which have entered the manufacturing process, but which have not yet been completed at the end of the financial year. Okay? The stuff that has been completed will then be posted to, what do they call it? Final products. All right? It will be posted to final products. And then when you now do balance carried down and balance brought down, those balances, all right, which we know are the same, okay? Your balance brought down and your balance carried down. Actually, I'm doing it the wrong way around. Balance carried down and your balance brought down is the same amount. That is the work in progress that is still being done at the end of the financial period, okay? Cool. Then finished goods, this is what I was talking about just a second ago. The balance of this account represents the production cost of complete items in inventory at the end of the financial year, okay? During the course of a financial year, the cost of goods completed will be credited to the work in progress account and debited to the finished goods account, okay? Then sales, this represents the amount received during a financial year for completed goods sold, okay, for cash or on credit. And then cost of sales, this represents the manufacturing cost of goods sold during the financial year, okay. Remember, cost of sales, we only account for cost of sales when we've sold the goods or the inventory that we have obviously completed, okay. The finished goods account will be credited with this amount and the cost of sales account will be debited, okay. Right. Okay. I think a lot of these things will make sense when we actually just go through the examples, but you guys can by all means go through that. I promise you it's not rocket science. When you just look at it, you'll be able to make sense of it. The only thing that you need to master here is what are we, I'd say, closing off, so to speak, closing off this account to. For instance, work in progress to finished goods, okay? So those are the things that you just need to remember, because I know you guys can balance, okay? I know you guys know that this is an expense, so I need to debit when I incur it, all right? I need to credit when it's decreasing, etc., etc. Same principles here, all right? So as long as you can do that, then you'll be fine. As long as you can remember that, then you should be fine. All right. Then here we're just wrapping up by saying, obviously they're highlighting that you begin to see the difference between doing the books, the accounting books for a manufacturing company and that of an administrative when you start to try and combine the costs and stuff like that. Only after determining the manufacturing cost will one calculate the cost of sales, gross profit, and subsequently the net profit. Okay, so basically what they're saying there is when it comes to let's just actually read. When the books of a manufacturing concern are complete, the most important procedure to remember from an accounting perspective is the cost of production will always be calculated first. Okay, so that's all they're really saying. Cost of production will always be calculated first. With an administrative company, we could actually calculate it at a later point. Okay, because it's really you're just worried about your cost of sales. Yeah, so it's not too much of an issue there. Okay, but here it's because of all the different costs that we have involved: direct materials, labor, and overhead, manufacturing costs. So all those different cost elements is what makes it, a bit more difficult and why we have to focus so much attention on it. Okay, here, second last slide, they're saying the production cost statement. Okay, the production cost statement is most widely used and summarized statement of manufacturing costs. The statement incorporates the following three elements as discussed: direct materials, direct labor, and manufacturing overheads. And that makes sense because those are the three elements that we use to determine our production cost, how much it costs us to produce this item or this product. Okay, when setting up a production cost statement, it is very important to fully understand the mechanics of the work in progress department and how inventory moves through it. Okay, and I think this will make total sense when you are actually looking at the T account and seeing how inventory is moving in the work in progress account. Okay, because obviously we're going to have raw materials moving in there. We're going to be having direct labor in there, and so forth, so forth. Also manufacturing overheads in there as well. Okay, right. I don't think there's anything too important here, but as goods are completed, their costs are transferred from work in progress into finished goods. Finished goods represent the stage during which products await to be sold to customers. As goods are sold, their cost is transferred from finished goods to cost of goods sold. All right, in other words, cost of sales. Okay, so that's in a nutshell the process. We go to the work in progress whilst we're still developing this product. After the work in progress, we go to finished goods. After finished goods, we finally end up with cost of sales. Okay? All right, so that's the process. It is only at this point that the various materials, labor, overhead costs involved in the manufacture of the products being sold are finally treated as expenses. Okay. Okay, because remember we said raw materials is an asset. All right? It's an asset, or direct materials is an asset. All right? Only at this point, then is it now an expense. Okay, and ladies and gentlemen, that is your unit 6. Okay? Like I said, it's very short. It's really just about understanding that process right there. Okay. Any questions or thoughts? Any questions or thoughts? Okay.